Hi, everyone. Welcome to Macro Meets Business, Insights from Wharton and Beyond, Penn IBEX podcast meant to analyze macroeconomic trends and their business applications. I'm your host, Diego Ordonez, and I'm the Economic Analysis Chair here at Penn IBEX. Today, we'll be discussing national bailouts, specifically Argentina's $20 billion swap line granted to it by the US and Mexico in 1995. In this episode, I will be speaking with Dr. Maria Pia Olivero from Swarthmore College, and my co-host Khlood Awan will be talking with Joaquín García Argibay, one of the co-presidents here at Penn IBEX. Hi, everyone. So we're joined by Dr. Maria Pia Olivero. She did her undergraduate studies at the Universidad Nacional de Córdoba in Argentina, where she graduated with a Bachelor in Science in Economics. And she also has a Master's in Economics and a PhD in Economics, both from Duke University. She's currently an associate professor at the Swarthmore College Department of Economics and an associate editor at the Journal of Money, Credit, and Banking. How are you, Professor Olivero?
Hi, Diego. It's so nice to see you, and thank you so much for having me here. Such a pleasure.
Thanks for coming.
Yes, of
So
course.
to get started, could you briefly describe for the listeners what the deal announced in October sort of is? So we know this is a typical national bailout for specifically from the US to Argentina. But if you could go a little bit into the macroeconomic aspect of it.
Yes. So as Diego mentioned, I graduated with my Bachelor's of Science in Economics from a university in Argentina. So I lived pretty much my whole life there, and I've done work in policymaking, and I advise some governments right now. So what is very important to realize about the October swap, it's a swap. It is not a bailout. That is very important, and it has been heavily emphasized by the Trump administration here in the United States. Um, Many of the people at the Treasury and the Federal Reserve here in the US have been very specific about the fact that currency swap, should not have any cost for the taxpayer here in America. So the idea of a currency swap from the macro finance perspective, it's a commitment, but no money has been transferred from the United States to Argentina at this point. It's a commitment, it is an arrangement whereby one country, so in this case, the United States, the central bank, commits to provide foreign currency reserves for $20 billion in the event that Argentina would need them. So basically, the US would buy pesos for Argentina. Now, think about this from a very simple supply demand perspective. Uh, Before the US even buys a single peso, they are sending these market signals that they are willing and able to buy as much as $20 billion worth of pesos in the international market. So that in itself, not that we think it's going to appreciate the peso, but at least it's going to contain the depreciation pressures on the peso. Now, another thing that is important to think about from the perspective of the US is that $20 billion is a lot of money for Argentina, but it's not a lot of money for the US. So to put these numbers in perspective, to give you an idea, the gross domestic product of Argentina, the entire production of Argentina in the second quarter of 25 was $633 billion. So this bailout for Argentina is a significant amount. It's 3% of their GDP. Another way to think about it is that the reserves of the Central Bank of Argentina, the last number that I was able to get access to, was $50 billion. So all of the reserves, international reserves held by, as we call it, BCRA for its acronym in Spanish, Banco Central de la República Argentina, all of their reserves are $50 billion. So you can tell how 20 billion is a very significant amount for Argentina. It is not such a big deal for the United States. The other thing is that this is not a bailout. So until the currency swap line is activated, and we use that specific terminology, basically until Argentina decides to draw some of those $20 billion, this is just a contingent commitment. So far, this is just the US sending market signals that the Trump administration trusts the direction in which the Argentinian economy is going. But there hasn't been any change in what we call fundamentals.
Great. So, what are the key vulnerabilities in the Argentine economy that would cause the US to have to take this sort of action?
Yes. So Argentina, as I'm sure most of the listeners know, is an economy that has always been heavily impacted by inflation, more than by inflation, by hyperinflation. So we had significant episodes of hyperinflation in the 80s, but also in the early 2000s. So inflation is something that the average Argentine business owner, the average Argentine consumer, unfortunately knows a lot about. And the problem, how do we connect inflation, the main problem in Argentina, always? So no matter where you're looking at a recession, at an expansion, at a period where financial markets are doing relatively well or not, inflation is always a big issue in Argentina. So how am I connecting that big endemic problem of Argentina with the bailout and with what we think the US administration had to do uh, to, to have to provide this to do this swap. There's basically two important theoretical transmission mechanisms through which peso depreciation, even the threat of higher peso depreciation, translates into higher inflation. There's two theoretical transmission channels. One is expectations. So you're working with an economy where, again, the average business owner, even a very small business owner, the average consumer knows a lot about inflation, and they remember that every time the peso depreciates, inflation spikes up. They go to the grocery store, food is more expensive. They go to the mall, clothing is more expensive. The cost of utilities, transportation, gas, etc. So one is just expectations. Even if a peso depreciation wouldn't affect the cost of production for Argentine goods and services, just the expectation of the depreciation is going to make people be more worried about inflation because they remember what has happened in the past. Then one way to protect themselves against inflation is going to be to run to the closest bank to buy US dollars. You also have to think about it in the context of segmented financial markets where most people do not have access to sophisticated financial instruments as we do here in the United States. So if you have some savings, the only thing you can do if you expect inflation is to run and buy US dollars, run to that simple safety asset that most people have access to. So a peso depreciation generates inflation through those expectations mechanisms. But also there's another mechanism, which is through the cost of imported goods, the cost of imported inputs. The Argentine economy is a very productive economy at the agricultural level, also in mining, mostly in primary sectors. We as in Argentina, rely heavily on imported inputs for production and also on imported consumption goods, mostly durable goods. So peso depreciation is going to translate directly to higher cost of production and therefore inflation.
Right. So we know Argentina kind of has a history of this, of taking on debt. Obviously, they took on a lot of debt before the 2001 crisis, when the IMF deemed that Argentina no longer fulfilled the requirements for the IMF to issue them credit. So that obviously fueled the 2001 crisis. And then in 2018, the Macri administration took out a loan from the IMF of, I think it was around 57 billion. Um, which, as you explained earlier, is a significant amount for the Argentine economy. And in both cases, Argentina actually defaulted on their debt. So this swap is very similar in the sense that in the IMF, the US has a majority power, but it's a different kind of aid. So, given Argentina's history of receiving aid and defaulting on its debt, what risk does the U.S. take on, and what risk can we see in the Argentinian economy from taking on this swap deal?
Yes. So from the US perspective, my assessment is that this is a very negligible amount of money for the US. So even when Argentina starts activating the line, um, I don't think that that's going to cause any dent from the US perspective. To be honest with you, to me, the most important element of this swap, it's not necessarily, or it's not only economic, it's more of a geopolitical considerations. It is the United States showing the rest of the world that they have allies in the region. So from the perspective of the US, I would say that everything is positive and I don't see any risks. Actually, what we did see, so this swap was signed October 20th, what we did see this week is a very significant trade agreement signed between Argentina and the United States. And we don't know the details yet. The details are just starting to come up, uh, as of today in the main Argentine newspapers. But when you look at the details of the trade agreement, it has very, very favorable terms for the United States. We would think that the swap and the trade agreement are not related to each other. The beauty of using cameras for this podcast, right? So I'm just gonna end there, but this part. But I think it's very important to realize that this trade agreement came only a couple of weeks after the swap, and it's a very beneficial agreement for the United States. So now, in terms of the risks for Argentina, what I would be worried about is uh, moral hazard incentives, in the sense, Diego, you said very well that Argentina has defaulted on its debt twice very recently and it has overborrowed. So when we look at the debt to GDP ratio, thinking of the denominator, thinking of GDP as an indicator of the capacity to repay, um, Argentina has borrowed well beyond its means. So one concern would be this is another incentive, not just for Argentina, but for other countries in the region to sustain this pattern of overborrowing. The other element, and it's related to political risk as well, we do know that this agreement was signed after the Milei administration, after Javier Milei's administration, or after their party, La Libertad Avanza, that would be the freedom forward, freedom in the sense of economic freedom. They won the midterm elections in Argentina by a very wide margin. And I don't think any economist or any person in political science that you would ask about would think that the results of the midterm election are exogenous to the swap. So I would say that one risk for Argentina would be that we are surrendering some of our sovereignty because a lot of the structural reforms that are coming in Argentina are tied to the conditions of the swap. Now, that's not to say that I don't think that the structural reforms that are on the table right now are not good for the country. So, if anything, if the swap puts additional incentives on Argentina to follow through those reforms, in my own opinion, in my mind, those are good incentives.
Right. So yeah, in terms of the U.S. perspective, actually, I think on November 11th, it was Reuters reported that Secretary Bessent has said that the U.S. was actually making money on the swap deal. So that's a very good point. And on the Argentinian side, we do see, as you also said, that there could be political motivation towards this. Obviously, the deal wasn't signed until after the midterm elections were won by Milei's party. Um, as a matter of fact, I believe President Trump came out and said that um, the U.S. wouldn't be, quote, as generous with Argentina if the party didn't win the elections. Um, but how do you think obviously, the rumors of this swap deal were out well before the midterm elections. How do you think the the rumors and the news and the speculation that came out actually impacted those election results? And how have we seen like a change in mentality across the country?
Mhm. Um, I wish I could say that the election results were exogenous to this announcement of a potential swap and potential money coming from the United States. I wish I could say that, but no, it's if you ask me what percentage of the results are given by the swap, I couldn't put a number on it, but I definitely think that this announcement had significant effects on the election results. Actually, kind of are I, I stay in touch with my family and friends from Argentina, and kind of a running joke the weeks preceding the election was that even if you politically were more on the left side, and if you disagreed completely with the way in which Argentina is going, if you disagreed completely with Milei's administration, you would pinch your nose and go to the polls and vote for them, right? Because the help from the United States was conditional on them having a good election.
Right. So I think, in terms of like the Argentinian economic power on the global stage,
Mhm.
it's pretty weak. So how does, US intervention and sort of the attention that the US is paying to Argentina impact their power, specifically with respect to other Latin American countries or maybe other developing countries in the world?
Yeah, so I think, well, two elements. The first one is that when you look at Latin America, the two largest economies in Latin America are Mexico and Brazil. Right now, both are governed by more of left-wing federal administration. So the only country or the only bigger country in Latin America that it's left for President Trump to keep exercising some kind of impact and effects on the region is Argentina. So that's the political aspect of it. The other element, which is related to the trade deal that I mentioned before, is that Argentina has amazing untapped resources. And this is something that a lot of people who know about Argentina know about, and we keep talking about agriculture, but the low-hanging fruit, uh, untapped resources are in energy and mining, natural gas production and transportation in particular, right? So I do think that part of this deal is both the swap and the trade agreement is related to the fact that the United States is trying to make sure that they get some access to these resources. Think about the area of what we call in Argentina the area of Vaca Muerta. So Vaca Muerta is a shale formation in Patagonia. It's one of the largest shale reserves in the world. It's comparable to the biggest US basins. There's a key or very, very rapid growth in natural gas production, and there's basically super fast growth in the infrastructure around it because these reserves of natural gas are in Patagonia in the middle of nowhere. There's no infrastructure around them. So the real estate market is booming. They are building buildings in a few months. They are building schools, they are building hospitals, right? There's going to be whole new cities that are going to start being, that are starting to be built in the area of Vaca Muerta. Uh, and the other one is lithium, right? So lithium has the reserves of lithium, both in Salta and Jujuy, have not been explored yet. Now, think about the trends in the demand for electric vehicles, not only here in the United States, but also in Europe. That's going to be a huge boost to the Argentine economy. And I'm sure the United States and President Trump's administration in particular wants to have some kind of relationships with those developments. So the big lithium triangle, as they call it, between Argentina, Chile, and Bolivia. So I think that's another big consideration for the swap. And as Diego, as you correctly said, it seems that the US is expecting to make money on, if not the swap directly, on the conditionalities of the swap, the involvement in the trade agreement, the access to these new untapped mining resources, energy resources.
Right. So as we've, talked about already in this podcast, Argentina has a history of facing high hyperinflation. Um, and, obviously this has been part of, the IMF debts and their defaults and everything. And actually, many economists have come out to say that this swap deal was essentially just putting off the inevitable. As a matter of fact, before the midterm elections, we already saw that what was a relatively stable dollar before the elections had started slipping a little bit. And we had started to see signs of inflation until obviously the results of the midterm elections stabilized the value of the peso again. So if you were an investor, what would be some red flags that you would monitor and pay very close attention to in a macro standpoint over the next 6 months to a year in the Argentine economy to make sure that these economists weren't correct, essentially.
Yes. Yes. So one, of course, is the exchange rate, right? So that's the market price that tells us when fewer people want pesos and more people want US dollars, the exchange rate is going to shoot up, right? And that's an indicator. It's a high frequency indicator. It's available, on an hourly basis. But more structurally, one number to pay very close attention to is the stock of international reserves of the Central Bank of Argentina. Because the Milei government is going to try to maintain the exchange rate, every time that the demand for US dollars rises or the demand for pesos falls, they are going to have to go to the market and sell reserves. That's how banking crisis or default crisis end up generating sovereign debt crisis and big currency depreciations, right? Because at some point, the central bank is going to run out of foreign reserves and they are going to have to let the peso float. And as you said correctly, Diego, then we're going to see the inevitable, right? Very, very stark depreciations of the peso. So before we sit in the exchange rate, one market number to look at is the stock of reserves of the central bank. And because of the history with these issues in Argentina, luckily, for all the bad reasons, but we do have access to very updated data, daily data on the stock of reserves. This is a number that is published in the daily newspapers in Argentina. So that's something to look at. Those are the indicators in the short run. Now, in the longer run, looking at the trade agreement, all the developments in the mining and energy sector, and of course in agriculture, but those have been going on for a couple of decades already. Looking at more of those long-run indicators of productivity in those sectors is going to be important for the long-run performance of equity and bonds in Argentina. So one of the things that happened with this swap is that over that week, a lot of people made a lot of money buying Argentine bonds and equity. However, if we think about it from a more economic theory perspective, as a macroeconomist, as a macrofinance person, the consumption asset pricing model tells us that the price of assets is a function of the productivity of the firms issuing that equity, right? Of course, it's also depending on how the investors discount the future, and that's going to be a function of the investors' risk aversion and preferences. But in the end, the price of an asset is the expected present discounted value of profits for that company. Those profits, it takes time, right? It takes time to see the infrastructure, the new infrastructure in mining and energy to start being seen in higher profits. But those profits in the long run I hope I'm not being too optimistic, will be higher for Argentina. So I think I'm very optimistic about the future of Argentina, but of course we have to be very careful about political developments because that can derail the train, and that has happened unfortunately a lot in Argentina. Um, so that would be the other. It's not really an indicator, but be very careful, very attentive to what's going on with the politics. Um, because as soon as the Milei administration loses the political support that they have right now, it will be very, very hard to maintain these conditions, even with all the increases in productivity.
Right. Yeah, I think that's definitely a very important message, especially speaking to the investment side of our club, Pen IBEC, to definitely be very, very wary of the macro indicators, in the next year, but also to be optimistic because of the raw natural resource abundance that Argentina has. Thank you so much for attending this podcast, Professor Olivero. And we'll definitely be in touch with you in the future to discuss this further.
Yes, Diego, thank you for having me. This has been great. And one piece of advice for the members of the club: you guys, most of you are young, so you have long time horizons. So think about that formula that tells you how much money I'm going to make out of an asset. Is the present discounted value of the lifetime profits of this firm. For some investors, they are already retired. They cannot wait to see Argentina reap the benefits of all this new infrastructure, right? But you guys can. So I would worry more, not worry, I would be more thinking about those long run gains than the speculative gains that can be made out of market volatility, just given by, announcements and the effects of announcements on traders' expectations.
Great. Thank you so much, Professor.
Yes, thank you, Diego. It was very nice to see you again. Thank you for having me. Bye, everyone.
Now we'll hear from my co-host Khlood Awan and Joaquín García Argibay, one of the co-presidents here at IBEC.
So we will be discussing the 1995 Mexican peso crisis. Just for some brief context, the crisis began in 1995 under Mexican President Ernesto Zedillo, when his government actually decided to take the risk of devaluing the peso. This financial disaster immediately threatened to destabilize the entire region and actually posed a potential threat to U.S. economic interests. To stop the panic, the president at the time, U.S. President Bill Clinton, actually pushed through a controversial rescue package using a $20 billion loan from the Treasury's Exchange Stabilization Fund, bypassing all of Congress. Although this move stabilized Mexico quickly, actually came at a very high cost domestically for Mexico. The financial adjustments caused real wages for Mexican workers to crash, hitting the country's middle class the hardest. But within 2 years, Mexico repaid the entire loan, and the U.S. Treasury made a $580 million profit. My name is Khlood Awan. I'm a junior at the University of Pennsylvania studying international relations and philosophy. I will be hosting the Student Perspective segment for the IBEC podcast. Today, I'm joined by Joaquín García Argibay, who is a sophomore studying finance in Wharton. So today we're going to be discussing the 1995 Mexican peso crisis, and we're mostly going to be discussing the international and domestic aspects of the crisis. In the 1995 crisis, we see the doom loop, which was discussed by Dr. Olivero, in which Mexico's weak domestic banks and debt actually dragged down the whole economy. What are some critical internal financial vulnerabilities that a country must fix at home to prevent this doom loop from triggering a crisis in the very first place? So what are some preliminary actions that a country can take?
Yeah, definitely. So first of all, thank you for having me on this podcast. Very happy to be here and talk about this with you. So from those of you guys who don't know what the doom loop is, it's basically a feedback loop where the government's financial health, if it's weak, it leads to destability in terms of the banks, and you get this loop of that the government needs to issue more debt to pay out its obligations, and they might have to bail out banks, and it just gets worse and worse over time, and they need more injections of capital into the country. I think for avoiding the doom loop, I'd say that prevention is key. So you first of all, you want to have a lot of the borrowing come from local currency, not dollars, and then stretching maturities, so less comes due at once. Those sort of ideas are very key. You want to hold enough reserves to cover short-term debt. In general, right, when you're dealing with banks, you want them to be holding more capital, and you want them to be being less risky in the way that they're using capital that's in their pockets. So yeah, I think those are some of the big things that I talk about. I think when we're talking about Mexico in general, they used the tesobonos, which were short-dated and dollar-linked, and they had very thin reserves left, which exposed the country, and when the peg slipped, everything went and collapsed. So yeah, prevention is key.
Yeah, of course. Those are some great insights regarding the crisis, especially within the context of Mexico. Also, it's important to note that U.S. intervention was actually largely driven by the fear that the crisis would spread. So, like, we see the international global effect of this, where this could possibly threaten American jobs and destabilize all of Latin America. So just in general, once a crisis like this begins, how quickly can a country's currency or banking system collapse actually spread nationally? And like, how can possible countries like bordering sort of mitigate these impacts?
Yeah, well, we live right now in a very globalized world, and so a lot of economies are mutually dependent on other economies. For example, if China collapses, the United States will collapse, Europe will collapse, and the same applies to many countries. Latam is very connected in general as well. So when Mexico collapsed, in fact, I think there was the tequila shock, they called it, also hit countries like Argentina and Brazil. So I think that it's difficult to prevent contagion, or like this sort of like fear that spreads around everywhere, because once the market breaks somewhere, investors sell similar risk elsewhere. So currencies are going to drop, yields are going to jump, and banks are going to, in general, struggle to get dollars. I think what we can do is, first of all, be tracking it very well as a country. So watch how those spreads are looking, watch how reserves are changing, and you want to contain it with certain tools. So some that I've read about, like IMF precautionary lines, regional pools, and central bank swap lines. Those are some key ideas that are thrown out there. But really, in general, we live in a very globalized world, so you're going to be affected in some way or another by contagion. And if you're well prepared and you have these sort of tools set up, you're going to have less of an effect, but it's difficult for sure.
Yeah, just expanding upon that, do you think there's any sort of like policies that governments can like initiate to sort of mitigate these impacts? Or like maybe is there a way to negotiate? Because especially specifically in this context, we do see how like when the new presidency arises, he devalues the peso, which was something that the country was unable to handle. So were there any like steps that could have been taken to prevent this, so like politically?
Yeah, well, I think I'm not too aware of like the entire context surrounding the tequila crisis. Obviously, devaluing a currency comes with a lot of risks associated with it. Now, yes, it is very true that if you devalue your currency, it's worth less. And so sometimes you can help mitigate debt in certain scenarios. So if you owe a certain amount of pesos to other countries, it's worth less. But there's a risk associated with your currency being worth less. Is less investments are going to come in. Yeah. People see your country as riskier. And in general, the economy is going to take a hit from outside investment. I mean, I'm from Argentina, so I've seen how policy changes affect currencies all the time, and how in fact, those policy changes will then affect the regional economies as well. So it's very important that from the political side of things, I think this is something the United States does very well, is the Fed and its sort of system is super good at regulating these policies. And we don't see it in every country. Some countries' political side and economic side are very closely attached. So yeah, sort of creating processes that let you do objective and quantifiable economics on your country and not mix policies and political side of things with the economic side of things, which is usually and should be very objective.
Going off of that, we did see that the US actually took a very controversial step where it took a unilateral approach to bypass Congress and dictate its terms. So basically, Congress said they didn't want to give this money, but the US said, well, under Bill Clinton, said that this will negatively impact American citizens and possibly the global world. This was ultimately effective, but did receive lots of backlash. So if we believe in a shared global risk, what kind of official negotiating structure should exist so that all creditors, such as the US, IMF, and other major powers, can agree on terms together to ensure fairness without slowing down the rescue too much?
Yeah, definitely. I mean, I think we have some sort of international structures in place, but the problem is that international policies are oftentimes not aligned. The goals of the United States are not matching up with the goals of China, are not matching up with the goals of Middle Eastern countries. And so it's very difficult to get these sort of unanimous actions going through, right? The Mexican economy collapsing is very deteriorating for the United States because we do a lot of our deals with Mexico, and we get a lot of exports and imports go back and forth between the countries. But it probably has very little effect, for example, on a country in Asia, which doesn't really deal with Mexico. And so I think in this sort of scenario, the United States acted in probably the best way. They intervened early when they should have intervened, because if they let this crisis go on, it would have impacted the United States and its citizens. I think in general, having these sort of regional structures. I know there was one between the United States, Canada, and Mexico. I'm not sure with recent policy that that's broken down or not. I think, what was it called again?
Yeah, it was called the NAFTA.
Yeah, okay, so the NAFTA, which was that trade agreement that existed between the countries, I'm not sure if now it's been replaced with something called USMCA or something like that, I'm pretty sure, is the new structure in place.
Yes.
But having those sort of regional structures that can act quicker and are more focused on the countries within that certain, like North America or Latam or Europe, it's probably going to be the most efficient way of going about it because they're the most interconnected regions, countries between those regions.
Yeah, those are some really important insights, especially considering that we do live in a sort of global order where we don't have a single power controlling everything. So we don't have an hegemon, arguably. I mean, some people may argue that the US is a hegemon, but this can lead to obviously a lot of difficulties between borders, between states, especially in economic policies. So working on a domestic and international level is very important. So thank you so much for all your insights today in the podcast.
No, thank you so much for inviting me. I think the work you guys are doing with Diego and in general the people that are coming on the podcast has been amazing.
Thank you so much.
As we learned in today's episode, the $20 billion swap deal between Argentina and the US could actually be a moneymaker for the US, contrary to popular opinion. In terms of investor decisions, investors should closely monitor the impact of the swap deal over the next 12 months, given Argentina's history of economic mismanagement. However, investors should be optimistic about the future of Argentina in the long run, given Argentina's abundance of natural resources and growing exposure to the global market. Thank you very much for tuning in, and we'll catch you next month.